Yeah. What's going on, people? It's your boy Old Styles. I'm in the building. The Omari Wave, back at it. Another video. Today we're talking finance. Okay. So right now what you're looking at is Borrowell's, I guess you can call it their web-based platform. Borrowell is a app that helps you, if you haven't guessed it already, helps you build credit and make some pretty good recommendations in terms of credit products that might help you along your journey, your journey called life. All right, so a bit about myself. I've worked in finance for well over 10 years, and I've learned a couple things along the way. One being that this app can put you in touch with a bunch of different lesser known companies that can help you get towards your financial goals. All right, so if you haven't done so already, please subscribe to this channel, like this video, drop a comment if you like what you hear, share the video with a friend who can use this type of information. Let's get right into it. All right, so this is my Borrowell profile. As you can see here, if we explore my recommendations, they have credit cards, loans, car loans, mortgages, insurances, and different type of bank accounts. Okay, so me at the moment, what I can go for right now is a loan. And if you've watched any of my previous videos, I've spoken about how I've paid off some of these loans with debt transfers. Okay, so let's click on loans and let's see what we get. So it loads. Okay, so basically it's going to ask me, right, if I want a personal loan, a car loan, or a business loan. Let's go to personal loan. Let's just say you need right now $5,000. Okay, it says here that I've actually been pre-selected for a Fairstone loan. Okay, and if you watched my last video, okay, I showed you how I paid off my Fairstone loan in less than 6 months. Okay, how I did that was with a debt transfer. So I transferred the debt from this Fairstone loan to another loan, a Go Peer loan. Okay, so let's get back. Look at this Fairstone loan here. So this is the hook. Make no payments until October. It's September the 1st today. So basically you have about a month and a half to get your stuff together to be able to make the first payment. Okay? That's not the important part here on this screen. What have I talked about in my last video? What is the killer with these loans? Yes, it's the interest rate. Okay, so yeah, you can get an unsecured loan, which basically means you can pay it off at any time, right? So you can pay it off in one lump sum if you want at any point and any time between 6 to 60 months, right? You can pay that off in full, this loan, whatever you're approved for, and you can get approved for $5,000 to $25,000 depending on what you've been, I guess in this case, pre-selected for. My last loan, I was actually pre-selected for $7,500. But again, going back to what I was saying, this is the killer. On that $7,500, I was paying 26.99% interest. Okay, so my first payment once I was approved for that last loan was for $290, and that was per month. Sounds okay, right? But the problem is that within that $290, about, I would say $20 of it was actually going towards the principal, and $270 was going towards the interest, right? So be very careful with these type of loans. Okay, the interest rate is very high, and this could have you paying $290 out of your account for the next 60 months, which is 5 years. Be very careful, man. But again, a very good suggestion if you're looking for cash right now at this second, depending on anything, right? So they don't even ask too much questions as to why you need the money, but if you need it, it's there for you. Okay, so that's Fairstone. If we move down a little bit, they have another option here. I'm not sure if you can see it. I might have to minimize my screen a bit. Okay. So, oops. Okay. Anyways, it's called Spring Financial. Learn more. Yeah, basically it's Spring Financial. There you go. Spring Financial. Unsecured loan. Up to $15,000 you can get. Look at the interest rate though. 18.99%. So you're kind of getting a credit card level interest, which is a little bit better. That's like the best you can get. But at the same time, this is if your credit is, like supreme. And if your credit is that good that you can get an 18.99% interest on a loan, right? Then why wouldn't you just go to a bank, right? Where you can get an interest rate of maybe prime plus 5%, which maybe could be upwards of 7% interest, right? And pay much less in terms of interest on your payments. So beware of these type of companies, Spring Financial. But once again, they may not ask too much questions and you may get approved and the money in your account within a couple business days, up to $15,000. Okay. So this is Spring Financial. So quick apply is very easy. And it says here I have a fair chance of getting this loan. All right. So let's get back up to the top here. So let's say I want a car loan. I would click here or click here. Let's see what they would be able to give me. Now, I already have a vehicle paid off in full. But if I wanted to get another car, or if anybody out there is looking for a car, there are plenty of lenders out there who would be glad to have your business. Okay. So some of them being 8 came up here. Okay. And yeah, update your income to get more accurate recommendation, chance of approval. Yeah, that's about right. I'm more on the higher end side of these figures, but nonetheless, that's besides the point. I'll leave that alone. That's for another day. Look at this. Auto credit deals. Secured loan. What does that mean? Secured. This means if you get approved, okay, for $50,000, okay, between 12 to 96 months. 96 months. How much is that? What is that? Like 60, 72, 84, 8 years. So this is an 8-year loan, right? If it's secured, that means that you're going to have to be paying whatever you're approved for, right? You're paying $50,000 at 96 months. Your payments could be, let's just say per month, I don't know, maybe like $300, I would guess. You're locked in to that $300 for the duration of 8 years, right? And it says I have an excellent chance of getting this. So if you wanted to break this secured loan, you'd have to pay out some type of interest, or you'd have to pay out some type of some type of penalty or something along those lines, right? Okay. So, and this, the only thing I like about these type of loans, I don't like the secured part. I would definitely want something that's unsecured, but I like the fact that they would definitely let you choose your own car and then work with the financing company, right? With having them pay the money directly to the financing company, and then you just have to deal with this particular company. So you find a car, you holler at these guys. After you found the car, they pay you out the money, then you start paying them, and you just kind of keep it moving. But again, I don't like that secured. And so that's pretty much the same thing for all of these, right? A bunch of places you've never heard of, right? So autoloans.ca, auto loan service. Maybe you've heard of Canada Drives. Maybe you've heard of carloans.ca. Maybe you've heard of ontarioauto.co. Excuse me. Okay. Long story short, they're all willing to give me an excellent, a new car, excellent upgrade. They're all willing to do that. But the only thing I don't like about these things is that they're all secured loans. So 12 to 96 months, I don't like that. That's 8 years of $300 coming out of my account. And if I ever want to break that, I'm going to pay a penalty. So I don't like these loans because they're all secured. I'm sure I can find some unsecured loans out there, but I'm not interested, especially the fact that I have a car at the moment. So, but again, if you're ever looking for a car loan, Borrowell will definitely help you find a car loan suitor. All right, so moving on. Let's check out bank accounts. So with bank accounts, these are all pretty straightforward. What they're gonna try to find here for you are they're gonna try to find here high interest rate savings accounts for you, right? Or well, I guess that's what I'll be looking here for. So at the moment, EQ Bank. I've never heard too much about EQ. I've seen them around in passing, but they can get you a is this a savings account or checkings? Personal. Yeah, pretty much it's probably a savings account. Right? So EQ Bank Savings Plus account, more than just a savings account. So you can get an interest rate of 1.65%. Nah, I guess that's not good at all. Depending on what you're saving for, or how much you're trying to save, or how much you have to save, you're not really getting much there. So moving on, Neo Money account 2.25, not bad, but I think the highest one I'm gonna see here is Simply Financial high interest savings account 3.85, not bad, but yeah, I mean, speaking of accounts and savings accounts, you really have to have money and have to have a long-term plan with this money. So, and there's so much ways to diversify bank accounts. So to start investing in stocks, and there's crypto and mutual funds and RRSPs, and I mean it seems like a video for another day, but I mean if you're just starting out and you're just looking to get a bank account, I would still suggest Borrowell, because they can pretty much find you a bank account with a very good interest rate, a savings account with a decent interest rate. Okay, so yeah, these are some of the bank accounts that they offer. Simply Financial, not bad, 3.85. That's honestly not that bad. I mean, gone are the days where you're going to be getting 6.5%, and 7%. Somebody tells you that they can potentially give you 7% or 8%, they're lying to you. Look, they're selling you a pipe dream, okay? I don't care who they are, I don't care where they're from, they're snake oil salesmen. I'm sorry to tell you that. But that just doesn't exist in in 2022. Okay? Next. What should we do? What the heck? Let's go see credit cards. Now, credit cards, this is the one that at the moment interests me the most, because I think I'm going to need a credit card for this exact reason, a balance transfer. Okay, so the balance transfer rate is pretty trash, 14.90. But what you want with these balance transfer credit cards are you want an easy approval rate. You want to be able to apply and get a decent credit limit, and with that credit limit, you want to be able to transfer a debt, right, at a lower interest rate. So, for me, I think my next balance transfer would, for example, be for my Go Peer loan that I currently have. I would transfer that debt onto a low rate credit card, because the interest on that Go Peer loan is much higher than 14.90. I don't like the fact that it is 14.90, because I'm sure if I scroll down, I'll find credit cards that have a 0% balance transfer interest rate. So maybe for a year, for 6 months or something like that. That's what I'm looking for, right? So if I can consolidate at least 1 to 2 loans in the next year, I'll have a good year, okay? Because I have quite a few loans out there that I'm just trying to kind of pay back at the moment. I'm trying to fix my finances and win at this thing called life. All right, so at the moment, yeah, okay, Coho prepaid MasterCard. I mean, I'm definitely not interested in the prepaid card. If you don't know what a prepaid card is, Coho is going to want you to give them $1,000 for, or no, sorry, that's a secured card. Prepaid MasterCard just means you're going to load your money onto this card to use. So this is good if you're maybe not too financially educated, you would maybe use a prepaid MasterCard, but you'd have to educate me as to why you'd want to use a prepaid MasterCard as opposed to just a regular card, maybe if you don't get approved. But at the same time, you can always use Visa debits and stuff of that nature. So I really don't see a reason for a prepaid MasterCard. Um, yeah, I would just use a Visa debit. I mean, almost all the banks have Visa debits. So, um, I don't know what type of purchases you'd be making that only take MasterCards, but I guess you can justify getting a prepaid MasterCard. Um, but who knows? I mean, there's a lot of people who know how to do a lot more things than me out there. So, I mean, maybe if you have a reason to get a Coho prepaid MasterCard, by all means, but I'm not at that level of financial expertise and knowledge to have any type of reason. I'm not out here scamming or anything like that, so I don't need anything like that. But same thing kind of goes for a secured MasterCard. I mean, I still don't really think that people should be getting these type of secured MasterCards, because you got to give them, let's just say $300 for them to give you a credit card with a $300 credit limit. I think it's kind of counterproductive. People say it's to build your credit, but to me, for working in finance, for as long as I've worked in finance, building your credit to me is a facade. Okay, if you're a young person, if someone wants you to get a credit card to build your credit, they're selling you a pipe dream, right? Because your credit only comes into factor is if you don't necessarily have any savings and you need credit, right? How many 19 and 18-year-olds out there are going to be buying a house? Are going to, you know what I mean, going to be buying a house tomorrow, right? So it's kind of a North American scam, if you ask me, for just getting people into that debt cycle and paying interest. So if you're a young guy, you're 19, 20 years old, and you want to start building your credit, just save your money. Just open up a savings account, a high interest savings account, and start saving your money and diversifying your portfolio, and maybe start investing. Don't even look at credit. You don't even need credit. You want to buy everything in this world cash, so you don't pay interest. If you can save up 100K, you can save up 300K and buy yourself a condo or buy yourself a house. That's much more of a better plan than opening up a $300 secured MasterCard. Have that abundance mindset, and don't get stuck and don't get trapped by these companies here like Capital One. It's very counterproductive. Okay, so especially a card that doesn't earn any points, and especially if you don't have much knowledge on how to pay back these cards and avoid interest, you can't earn anything with this. It doesn't give you any type of rewards at all. So I wouldn't recommend these personal cards whatsoever, anything from Capital One. All right, so we've gone through the loans, we've gone through the credit cards, we've gone through the car loans, we've gone through the bank accounts. I mean, mortgages, for shits and giggles, pretty much. Yeah, there's not much here, and that's why I didn't want to go into it, because look, this is Borrowell is giving me a mortgage coach, right? They can compare me to 40 plus mortgage lenders in Canada. So that's the best thing about this this website. They can get you in touch with the people who you need to get in touch with, right? And that's why I like this site. That's why I'm making this video, to let people know that, like, if I need a mortgage and I can't get a conventional mortgage through the bank, I would come to somewhere like Borrowell and get in contact with 40 plus mortgage lenders. But a little ways away from that at the moment, but I still do have the information. So anybody has any questions, man, just hit me up. By all means, I'm here. Follow me on IG, the Omari Wave, Omari_Styles on YouTube, the Omari Wave on YouTube. But yeah, I don't even advise anybody to get too deep into the mortgage game without having a solid base of savings, especially in Southern Ontario at the moment, because the insurance and the interest rate just went up. You can do your research, man. It's not really a great time unless you have a lot of money saved up to purchase a house, and with a lot of money saved up, you can make that even more money. Without having it tied up into a mortgage, especially if you have decent income coming in and can have a great quality of life renting at the moment. So mortgages, conventional mortgages in Canada, in Southern Ontario, aren't attractive at all unless you have buku money. All right, and then Plan B mortgage. Yeah, it says here rates starting at 3.59. I mean, man, 3.59. Again, the whole hustle with the mortgages is, yeah, you'll get a good rate, but you're only gonna get that rate if you can put down at least 20%. If you can't put down 20%, you're only putting down 5%. Then I mean that rate's cool, but you're still gonna have to pay that insurance, right? So that so yeah, I mean I'm not really too into the mortgage game right now. I think just trying to stay debt free and get debt free and stay debt free and build wealth is a challenge enough at the moment. So that's why I'm not really too deep into the mortgage game here. I mean, kudos to people who are, but I'm not there as yet. I will be eventually, but not too interested in the moment. So moving on, insurance. I don't even get too much into insurance as well too. This is mostly going to be like car insurance, life insurance, home insurance, stuff like that. And they don't have much here, right? Lowestrate.ca. So a good recommendation, but once again, not really something that I already have all these things through my job, insurances and stuff like that, life insurance, health insurance, stuff like that. So not too interested in this one here, but again, a good recommendation, lowestrates.ca. If you're interested in getting car insurance quotes, nothing here for life or health, but nonetheless. Sorry, my mistake. Sorry, tenant insurance. Here we go. So home insurance, tenant insurance, Apollo insurance. Here you go, right? So you can have a good recommendation here. You probably never heard of them. You probably heard of State Farm, Allstate, but never Apollo. Home insurance. So that's tenant insurance if you have an apartment. Okay, here we go. Apollo, lowest rates, Square One. Right? So they got some suggestions there. And then life insurance, again, I have all these through my work, so I'm not really too interested. Sun Life, yeah, it begins and ends with Sun Life pretty much. They're like one of the major ones. Sun Life, Manulife, they're like the major ones in Canada. There's some smaller ones as well too, like we just saw, but I guess on this website they're not promoting them. So that's it. That's the review. You can also build your credit too, but I mean all this type of things, again, it's kind of a little counterproductive, man. So to build your credit, you got to do, just make your payments on time and start saving your money as well too when it's time to save your money, and your credit will just automatically go up. You don't necessarily need to build it, you just have to be responsible with it, man. Honestly, that's the best way to build it. So yeah, that's pretty much it, man. Yeah, beware of all these products that they try to sell you. Again, credit is very simple. You really and truly just have to, if you have a credit product, try not to pay any interest. Try to keep the balance low. If it's a revolving product like a credit card, and if it's a loan or something like that you need, then you want to already have some type of good established credit in order to guarantee approval for that particular product. But you don't necessarily need some type of something that you would pay for in order to build your credit. So beware of a lot of things that you may have to pay for, or money that you have to shell out to build your credit, because a lot of times it's just pretty much a scam, man. Like, there's a bunch of scam companies out there that will tell you to pay them certain money a month in order to build your credit, or get the secure credit card to build your credit. But yeah, best way to build your credit is to save your money. If you need a credit card, get it and keep the balance below, they say 20%. I think they say 20% utilization is the correct term for it. And that's pretty much it, man. That's the best way to build your credit. Once you're in a position where you might need a mortgage or something like that, cool. But the best way to buy a house would be cash, to be completely honest with you. It would be to build it from scratch and to buy it cash. If not, then, you can always rent, right? But rent with a plan. And yeah, more videos coming, but I'll just leave it with that. There's always no shame in renting. Home ownership's cool, but business ownership's cooler. So yeah, I think times are changing. People's mindsets are changing. Big up to guys like Dame Dash. We're out here spreading the word. Um, Graham Stephan, or what's his name? Again, two guy Grant. I don't know this name, but a couple white dudes out there that are pretty give out some good information as well too. Yeah, so I'll leave it at that. Savings minus debt, big up to him as well too. He gives us some very good information. And yeah, subscribe for more content, and I'm out. Peace.